Hey guys, I just wanted to record a quick video about FOMC. Today, Federal Reserve held another news conference and cut the rates by 25%, which was pretty much expected. However, it's important to understand how they think about interest rates and what they said in that meeting that sets up the stage for what's coming to the future. So I put out a tweet earlier right after the meeting and summarized what happened there. Basically, what they said was that they think the risk of inflation and unemployment are equal now, and that's code word for they are now equally worried about both sides, and they think that they have dealt with inflation, but I'll explain later in more detail what that means. But uh, they think the policies are still restrictive, meaning that they believe that the rates are still too high. And in the longer run, they have to come down. So that immediately tells you that they will be cutting rates further and further, if nothing weird happens. Then the third component is Chair Powell avoided providing any forward guidance, meaning they said, we don't commit to any future cuts. We don't really have any idea what we will do. We are data dependent. Essentially, another way to think about data dependence is they have no idea what's coming, and they think they are in a good place, but data should guide them whether they should be more hawkish or dovish. And the other thing was they basically, left the door open for anything in the next few months. Basically, they said it's possible that we cut rates faster if, for example, the economy seems to be too slow, or we might actually pause. So the next meeting might actually we might actually get a pause, and that will happen if we get a surge in inflation. Okay, so that's very important because that means Fed does not have a plan anymore. They just wait. They just wait to see what happens, and that essentially will communicate to the market that there is a lot of uncertainty, and the probability of many things now have to be reassessed. As I said, it's possible that the Fed gets more aggressive or less aggressive, and it's all about the data. Now, then basically when we look at the data, that's the latest inflation data that's available, we will see that this is how inflation has behaved after they messed up big time, and they caused inflationary pressures up to 9.1% in 2022. Inflation came down partly on its own because inflation cures itself, and partly because they caused a crash in a lot of financial markets. So through the rate hikes, of course, and then the inflation came down all the way down to 3, and then slowed down considerably from there. But it's on a path downward, and that's exactly what Jerome Powell mentioned. He said that we believe that we are on a sustainable path to the 2%. So they think it's sort of like a process that they set in motion, perhaps right from here. They set this in motion, and it's going to come down more or less faster or slower, but there's no concern that this will surge back up. Okay, so that right there answers a lot of questions about the fact that, the fear that a lot of people say, oh, if they cut, inflation is going to explode higher. So at least the Fed is saying we are not worried about that, at least not much more worried about the other side of the coin, which is a recession. Now, if you look at the unemployment, which is the Fed's second mandate, the unemployment rate went to a low of 3.5, I believe, in 2022. And per their theory, their idea basically is sometimes you have too much employment, which is, I know sounds crazy, but they think Americans have sometimes too much employment. And that's when companies are overly enthusiastic and they are over hiring for projects that are not viable. So in theory, they have to come in and make the policy strict, reduce the ability to borrow money, and that way many of these firms have to lay off workers. So in a perverse way, they actually want some level of layoffs, but not too much, of course. So that's what they've been saying, that like in beginning of 2023, the labor market was too tight. There was a lot of demand for labor, but wages were going up and all of that. But that has changed, and we've gone from 3.5 to 4.3. And then in the last couple of months, we've gone a little bit down and stabilized at 4.1. So they believe, and there's no way to kind of put exact numbers on this. There's a lot of judgment here, as much as they want to pretend. They want to pretend that they have some, fast and strong rules about this, but there's a lot of judgment going on. However, they think that the labor market right now is in a good place. So 4.1 in their analysis is not causing a ton of fear of a recession, because if you remember, a lot of folks were worried that this inflation rate might keep going up. And Fed is today saying that they don't think this is very likely, or at least much more likely than the other side as well. So that's why I say both sides of the Fed mandate have equal weight right now. However, if there's a surprise in the data, and if, for example, this unemployment suddenly comes back with a print of 4.4, 4.3, if it ticks up in a surprising manner, you'll be sure that they'll be cutting more. Same thing, if inflation reports comes back and suddenly drops to 2%, then they'll try to cut more. Why is that? Because they will believe they're sort of trying to be forward-looking, and as they think as time goes on, this will continue to go down. So the way they try to deal with this is to slowly cut the rate to provide some support for this inflation, like kind of put a foundation behind it, so that while it's coming down, it stops at 2%. They don't like inflation to be too low. That's a whole other rabbit hole. We can discuss that as well. But in their thinking, they don't want inflation to be low. And the fact that it's coming, rather rapidly down to 2 is worrisome for them. That's why actually they began the rate cuts. But that's the idea. So they think it's coming down, but they actually want to cut rates so that they provide some support for a soft landing. And I want to get to this comment. A lot of people are saying this is contradictory. The fact that Powell basically cut rates today, and then they also said inflation remains somewhat elevated. They think this is contradictory. Let me zoom in. Because if you believe that inflation is high, why would you cut? You should actually hike. But no, according to what I just said, they think they're on the right path, and they think inflation is coming down in the future, and that's why they are. And in fact, they think they're going to come down rapidly in the future, so they want to slow that pace down. I'm not saying that Federal Reserve is doing a great job. Actually, I've been one of the biggest critics of them. But a lot of times, people basically, people have been saying that the Fed is in trouble for like forever. So we have to also be realistic in our criticism. That's not what they think. However, they messed up big in 2021 and 2022. They caused a lot of inflation and so on. My guess is it's not the end of their errors. We will see more and more errors. Whenever you have a centralized body like this that makes decisions for the whole world, and it has to digest so much data, and their institution is pressured by a lot of constituencies and political centers, so they just can't make the optimal decision. So they're going to make errors and so on, but it's not like they are out of the bullets. And then the lesson of that for us moving forward is every piece of data now matters more. So you should expect the markets to be a little bit more volatile. with any new report, inflation high, inflation low, unemployment high, unemployment low, we're going to see rapid reaction from the market. And I will finish by this gem. Powell was asked, what if Trump fires you? Are you going to go? And he was, this was his answer.
Hi, Victoria Guido with Politico. Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
All right, guys. So that's it. You don't have to watch the whole event anymore. Hopefully this was helpful. I'll see you in our next video.